Hello everybody, lottie-dottie everybody. Welcome to Accounting Tax SOS, where we cover everything accounting and tax. My name is Christopher Cox, and in this video we are covering a tax topic because last video we covered an accounting topic. To refresh your minds, we covered capitalizing expenses for a building account, and this was for construction of a new building, which included loan interest that we had to capitalize. So if that sounds interesting or you guys need a recap, go ahead and visit my last video. So what we're going to do today, we are going to discuss business property depreciation using MACRS. And yes, this can be an accounting topic as well. So we will go ahead and kill two birds with one stone in this video. So let's go ahead and get into it. Alright, so here we are at our sample scenario. This is going to be a quick, effective scenario for you guys to learn the basics of what's going on with the MACRS depreciation. So let's go ahead and get into the scenario. At the beginning of the year, Franco began a calendar year dog boarding business called Franco's Dogs. Franco bought and placed into service the following assets, which are here below. Under assets, we have computer equipment, dog grooming, furniture, pickup truck, commercial building, and land. So first thing you guys should probably do, or what I do and I would advise you to do, is list the number of years that these are depreciable. So for computer equipment, that's 5 years. Any type of furniture, 7 years. Pickup truck is 5 years again. And then commercial building is 39 years. If you guys have covered depreciation in any of your classes, you should know that land is not depreciable, so we just won't worry about any of this down here. That's just in there to remind you or throw you off. So second thing we need to do is look up some of these. Here we have the MACRS depreciation charts. This one is for non-residential or rental property using the mid-month conversion straight line, 39 years. We're actually going to use this one at the end, and here is the one we're going to start out with. Okay, so we're actually not going to need to go past 10 years, so I'm going to move it over. I know you guys can't see the 10 years. We're just going to go to the 7 years. And this is only year one depreciation, so we're just going to stick here with year one. The computer equipment, 5 years. So we use this year one, go over to 5 years, and this is the amount we depreciate percent-wise. So we have 20% there. And then for the furniture, which is 7 years, we're going to go over year one to 7 years, and that's 14.29. So we have 20 and 14.29. So we're going to multiply this by 0.20 and 14.29. And we actually, 5 years, since they're both 5 years here for computer equipment and pickup truck, they're going to use the same amount of depreciation, so 0.20. And now for the commercial building, we will go over to that table I had first. The non-residential rental property mid-month convention straight line, 39 years. Year one, and then let's see, I'll put it down here under the commercial building. So year one, we go over to the month the property was placed into service, which was month 10. So we go over here, month 10, year one, month 10, year one, we go down and find 0.535. And we will just multiply that like we did on the other ones, 0.535. And then land, like I said, don't worry about that. And then once you guys multiply these out, you will get $1,000 for this one. For the computer equipment, you'll get $1,000 as well. And then for the pickup truck, you will get $2,000 there. And for the commercial building, you will get $1,445. For a total, let me go back. For a total of $5,445. So after that, that is all you need to do. This is a very simple example, but pretty effective, I think, just to show the basics of depreciation using MACRS. In case that you guys don't have the MACRS tables, you can figure out the amount of depreciation, like this 0.20, this 20% here, if you know the number of years that you're depreciating your asset over, and you know your cost basis. So I'll go ahead and show that to you all real quick. So you take your cost basis of $5,000, divide by 5 years, and you get $1,000. And yes, that is the amount you depreciate, but to get the percentage, you just go ahead and divide 1,000 into 5, and you'll get your 0.20. So that's all you do. It's really simple. But that's pretty much all you need to know for right now. If you guys want to get more in depth, just let me know, and I will make a video about a little more of the complicated aspects of depreciation. So yeah, just let me know, and I'll see you guys in my next video. Thank you guys so much for watching.